So here is the chart, proof that this stock has actually crashed 30% in the last couple of days. The stock is Unity Software and the ticker symbol is U. And here are some quick back of the napkin math showing you that ARK actually bought 1.367 million shares of this stock in just the last couple of days, and assuming a price of $130 per share, which is where the stock is at right now, this is over $177 million spent on this name. So we really got to spend some time here and talk about Unity. We haven't discussed the stock on the channel before. It's been a request from a ton of you guys, and I want to share some of my perspective, whether I think this sell-off is overdone and it's a buying opportunity, or whether this is justified and we should probably stay away from this name. We're going to talk about all that and more in this video, guys. So if you enjoy it, all I ask, hit the like button and subscribe if you're new to the channel. So Unity, if you're not familiar, is the world's leading platform for creating and operating interactive, real-time 3D content, or you'll see it on their website a lot as RT3D. They claim to empower creators across industries around the world. Essentially what their software does is it gives developers the tools to create innovative real-time 3D experiences and deliver better processes for almost every industry. Now I know this is extremely high level, but I don't want to get into the weeds here of what this business does. You can go to their website and read their About Us section and learn more about it, watch some YouTube videos on what the company does, some demos, that kind of stuff. We're here to talk about the actual stock and the business fundamentals. But what I do want you to take away from what the business does is that they're in the gaming space, theoretically. They do 3D, they do virtual reality. They're kind of in, a very software-centric space that is expected to grow massively over this next decade. You guys all know that things like esports is becoming massive. Games have always been around, and now mobile games are pretty much the new hot thing, especially during lockdowns when everyone was at home. They were stuck and they were just downloading games and playing games. Unity actually benefited tremendously from this, and this trend should continue now that a lot of these new users are hooked on games. So let's talk about the stock. Why did it drop 30%? Because that is a pretty significant dip for any company. The stock nosedived on earnings report. They reported EPS, which actually beat by 5 cents, revenue as well beat by 16 million. But the key takeaway that I saw from this is that the revenue grew almost 40% year over year. Gross margins did come in slightly under what was expected and missed by around 1.2%. Even guidance, they provided us guidance for next quarter and next year. Looks extremely good. They expect nearly $1 billion in revenue next year, and I think that they'll probably hit this fairly comfortably. And if they do, this will translate to like the mid 20% growth year over year. So not a bad earnings report at all. In fact, when you see earnings like this, 40% growth, good guidance, slight miss on gross margins, which pretty much is negligible in my opinion, you would see a stock either remain flat or actually shoot up quite a bit. But the market does what the market does, and this is why I always say never gamble on earnings, because it's just that, a gamble. Even when you see phenomenal numbers like this from a business, the stock can take a nosedive because there could be something in that report that investors just don't like, or maybe they're taking their profits, or who knows what the reason is. Just never gamble on earnings. This is a lesson learned from me over time. Trust me, I used to play earnings back in the day. Does not work out well over time. Now, I did spend some time looking through their earnings press release because I wanted to find out what is the reason the stock is down. Is it just pure sell-off? Was it just because it ran up too much? People are taking profits? What is going on? Now, the one piece that I did find was that they expect 3% less revenue in 2021, yes, you read that right, 3%, due to Apple's iOS 14 privacy changes, because this changes the way that mobile game developers acquire customers and how they optimize the lifetime customer value. So, I mean, that is a slight negative, but the company is accounting for 3% less revenue. Guys, $30 million, grand scheme of things, pretty much negligible, and people who enjoyed their games already are going to keep playing their games regardless of this privacy change from Apple. Think about it. This is what I would call a typical overreaction in the stock market if this is the reason that investors sold out. In fact, to me, if anything, $30 million, because of these changes from Apple, I find that pretty bullish because some companies may get hit even harder than this. So for them to expect only 30 million, only 3% less revenue, that's kind of speaks volumes to me personally. Now, you guys clearly know some big names have taken notice of this recently. They've started gobbling up shares. So we as retail investors gotta pay attention. Obviously from the title of this video, you know that Cathie Wood and the ARK Invest team have started buying Unity once again, and they're buying quite heavily here on this dip, implying that they see that this is oversold, undervalued, and a good buying opportunity. Now, another firm called Berenberg has come out and raised their price target on Unity software as well after this earnings report. Their old price target was 106, they raised it to 165, which is some pretty good upside from today's prices. But now, okay, here's the thing, guys. You guys know that I typically look for value, whether it's a value play, a growth play, speculative play. I still want to see some value in there. And for me, it's very difficult to justify a $35 billion market cap, even after this 30% dip, for a company that's expected to produce $1 billion next year. And it's not like that $1 billion is pure profits. That's far from it. It's just $1 billion in revenue next year. That gives this company a pretty steep price sales ratio and makes it fairly expensive even after this dip. Now, that being said, I can't justify this for a long-term portfolio hold as of right now with that valuation. There's no way it doesn't make the cut. However, after a 30% correction, I feel that there could be some room here for a nice 10 to 20% bounce because investors realize, okay, this was way oversold and they start buying it back up. This happens a lot of times, and just based on what I see from their earnings report, I don't think that a 30% dip here is justified. If investors were happy with valuations prior to this earnings report, a small correction here of maybe like 5 to 10% at max would have been a bit more reasonable, but 30%? No, I think that that's just a little too much. The market did overreact to this. Think about it, their earnings actually came in pretty strong. Their outlook looks very strong. Growth is expected to remain strong, but the market just sees this Apple news and it's 3% less revenue, $30 million, and they're like, oh, I gotta sell this stock, and it's down 30%. Come on, guys. Like I said, ARK sees this as an opportunity, and I think that it's definitely worth thinking about, worth looking into. And if this business is something that you think will, recover over the long term, you're getting a pretty good deal today. Now, that's not to say this is financial advice. I'm not telling you to go out and buy the stock. All I'm telling you is add this to your watch list, keep an eye on this, and who knows, after your research, maybe this is a good play for you. Now I want to show you this. A strong metric that I like is their customers pulling in over 100K in revenue keeps increasing, meaning that they find a ton of value from Unity software, and meaning that they will stay with Unity and keep using their tools. I also like that management's ambition here is extremely high. They set a target of 30% growth year over year for the business, and this makes things a lot more interesting for shareholders because now that $35 billion market cap could make a lot more sense if you're stretching this out a few years. Like I said, $1 billion for 2021, $35 billion market cap, hard to justify. However, if they're growing at 30% plus year over year, they can definitely grow into that valuation much quicker than many other businesses that have a similar gap between their market cap and revenues. And if the management team is able to execute on this and deliver on this, today's prices may actually end up being extremely cheap at around $130 per share. If anything, guys, lockdowns, all the stuff we've gone through in 2020 has actually helped accelerate this business to new heights. Investors have realized this, which is why the stock has gone up so drastically since IPOing last year. So to me, what I see right now is just noise, unless I'm missing something big here. But from my research, I did not see anything that was too concerning from their earnings report, and I think that investors are overreacting here, and this is possibly a buy the dip opportunity. Anyways, let me know in the comments what you think. Do you think that this is a buy the dip opportunity? Are you actually buying up this stock? What do you think about ARK's move spending $177 million on Unity? Love to hear your thoughts in the comments down below, guys. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.